Good afternoon, everyone. Today is Friday, the 18th of November, 2011. Good afternoon, and thanks for tuning in. It's Brian Shannon from Alphatrends here. Let's take a look at these markets. We did see some pullback, obviously, here this week. The S&P was down 3.6%, NASDAQ lost 4%, financials were down 5.6%. So pretty tough week for equity indexes. The S&P 500, as we know, has been kind of battling this 200-day moving average for a while, and we've been seeing these lower highs at that right around that 200-day moving average level. And this week, obviously, we lost that trend line of what a lot of people, so myself included, were looking at is in terms of this triangle forming. So let's take a look at that 65-minute time frame. Here we can see that this is kind of that trend line that we've been keeping an eye on, and we broke below that as well as some important support levels. So we broke this first support here at 123, and then we did make it down to the next level where it was basically kind of supposed to go, which was just about that 122 and lower level. But if we take a look at the volume weighted average price since the lows, and we've been keeping an eye on this, that is, for a while. You can see on the S&P 500 we're still right at that level, and what I think is a reasonable scenario for the S&P is that we're going to at least come down to and probably through that 50-day moving average next week. That's currently at 120.82, and I think we need to shake it below there a little bit before we have the possibility of a bounce setting up. So if we take a look at, these have been important levels as well, obviously, that 123.5, and then this basically 122, where we are right now. It was resistance back in September, a little bit of support found there initially at the beginning of this month, and we're kind of back to that level bouncing around. A little shakeout would be good. We had been seeing very light volume earlier in the week, and then, of course, the bigger volume came yesterday on that heavier selling. So we're right at the volume weighted average price since the lows back from September, actually October, and looking like if we're going to continue lower, then we want to probably keep an eye on these Fibonacci levels as well to see where the potential retracements will be. We're still above the 38.2% retracement, so this being our range, this is our 38.2% retracement at about 121. A 50% retracement would bring us down to about 118.40. So next week we're still, we have to look at it as we've broken some support, and that support, acting as resistance on the intermediate term time frame with a declining 5-day moving average. And we're going to need to at least heal through some time before this S&P 500 can be back in a position where maybe we're going to see a year-end rally. But right now, it's really starting to look a little bit shakier here. The NASDAQ did break down through the key level of 56 that we've had an eye on. We closed twice now below that 50-day moving average as well. And we're going to need to get at least back above this 56, this prior support. If we're going to recapture that, that's the minimum expectation of how we might be able to turn this market back around in here. If you take a look at the volume weighted average price since the lows in here, we were kind of flirting with it for a while and then broke down solidly below that this week. And of course, that horizontal support that we've had our eyes on at 56, we're going to need to see it get at least above 56, and then probably even up through about 56.50 to have any confidence in this. So the NASDAQ is not behaving well. We take a look at the Fibonacci in here, we'll see that we are down below the 38% retracement, and a 50% retracement would bring us down towards about $54.65. So we're breaking below all these key moving averages. They're kind of back and forth above and below each other, and unfortunately it doesn't give us a clear, now this market's going to get destroyed and, perfect opportunity for shorts. As I said earlier, it's it's complacency that really hurts people in a market like this. You just can't get complacent with a position in either direction right now. The Russell 2000 is still above its key level of prior resistance in here, which has been support as well at about that $72 level, and just below that, well, not just below it, but at $70.19, we have the 50-day moving average. I think a test of that would seem likely and reasonable. We've got this downtrend line, and here's kind of what our triangle has been for the Russell 2000. And obviously, we broke below that. We broke some support, and now we've got this trend line and this prior support holding as resistance. We're going to need to see at least 73 to kind of get back towards the neutral for the Russell 2000, and it's looking at the 65-minute time frame. What we want to do in here also is take a look at that volume weighted average price, which we're holding above, curiously enough. It's $70.85, and you can see that this is not only the volume weighted average price since the October lows, but it has been an important level of support. So I think that this is going to be a key level at about 70, really about 71 next week. But if we breach that, then it seems pretty likely that the 50-day moving average would kind of act as a magnet, and really what set off a lot of the weakness in the market is something we've been keeping an eye on, is that the steady pressure that was building in the financials at that 1280 level. What we had seen was that repeated lower highs in here, and then the tests of support that were coming more frequently. That is, less time in between those tests. So the sellers were getting more aggressive through time and also through price with these lower highs. Market, of course, did break down below that. I was thinking maybe we could, maybe it would be just a quick breakdown and rally back up and be able to squeeze, be a catalyst for a short squeeze. But that obviously hasn't happened, and that was only a potential scenario. We're going to need to at least get above 1280 next week and hold above that for a half hour or so before we would begin to think that maybe this market somehow is going to turn around before the end of the year. But it's still looking ugly. We've got a level down here at about $12.15 that still looks likely to be tested. We've got lower highs and lower lows. We've got a declining 5-day moving average. So now's not the time to be looking for a turnaround, but again, be alert of what could potentially set up a turnaround. The semiconductors are right at that key level. That's 30 and a half. We've been talking about 30 and a half for several months, actually. Prior resistance, and it had been holding as decent support. Now we broke below the precise number 30 and a half, and we're right on that 50-day moving average. The 50-day moving average is at $30.40. But these semiconductors, they got hit. They were holding up the best, really, it seemed. Couldn't make that higher high, and then just got creamed here the last couple days as it's broken slightly below this little support level and kind of trying to hang on right in there. But again, there's no evidence that this market will hang on. We're going to need to see it at least above 31 and hold above 31 for, again, at least a half hour or so. So right now, we have to treat this market as neutral to somewhat negative. And last week, I believe, we were talking about it being neutral to somewhat positive. And this week, obviously, with these percentage movements, you don't want to chase in one direction, but we have done damage to these markets. And the S&P, which was positive year to date for a couple days this week, now back down 3% on the year, and it just continues to be a very tricky, volatile environment to be in. So hope you're doing okay in this market, and I'll talk to you next week. Have a good weekend.